Yo, everybody. This is episode number 3 of the 5.5 Daily Dish. I am Jake from ForexWithJake. Let's get cracking on today's video, which is risk management. This is extremely important. It is a huge part of trading. You do not want to miss this video. Let's get started. All right, everybody, I'm going to start this video like I start all of them. I have Tourette's, so if I'm twitching, my neck's moving weird, don't worry, don't call anybody. That is completely normal. That is part of my life. I don't even notice it anymore. It is Tourette's, no big deal. I'd like to give a big shout out to Joshua Chavez, who is my dad has begun talking with, and we hope to welcome you to the business soon. So welcome, Joshua. All right, guys, so today we're talking about risk management. This is an enormous part of trading. The thing that can make you most discouraged about trading is losing. So it's very important that when you lose, you're not losing everything. You need to lose properly and with the correct amount of risk. So for me, what that means to me is 2% per trade. Lots of people do it different ways. There's a million things out there. My company generally promotes 3% total across all your positions. So if you have 3 trades open, it's 1% at a time. I typically only have 1 to 2 trades open at a time. So my max risk per day is about 4%, which is pretty reasonable. I'd have to lose for over a month straight every single trade to blow my account. And blowing your account is a huge deal. And you can actually blow your account without losing all of your money. If your account gets below about 50% with open trades, the broker can margin call you and take everything off the table and basically wipe your account just for having too many open trades with too much money on the table. So it is very important to be cautious. So I'm going to talk about pips, lot size, stop losses, how to stay out of trouble, and how to trade safely. All right, so let's jump in. So for your whatever percentage you want it to be, if you have a $1,000 account, and for me personally, I think 2% is a great number. But again, it depends on how you're trading and how many different positions you have open. But 2% is what I use, so that's what I'm going to be using today with you guys. 2%. So $1,000, 2% of that is $20. So that means, based off where my stop loss is, how many pips away it is from my entry, that number is very important. So if my stop loss is 20 pips away from the entry, that means a 0.1 lot size is $20. That is 2%. So this is what you need to do to figure out what number you want your stop loss to be. You take your account, so let's say $1,000. You times it by the percentage that you want to have your risk at. 0.02 is 2%, for those of you that are not math whizzes. So that is $20, okay? So then I'm going to count my pips away from the stop loss. So if I am 20 pips away, okay? So that means I can look at this handy chart right here. 20 pips. 20 pips is $20. So that's 0.1 lot size. Okay. Now let's say it's closer. Let's say my stop loss is only 10 pips away. That means that I now can trade with a 0.2 lot size, because 0.2 is $2 per pip times 10 pips is $20. So I'm at 2% still. Okay. Now let's go the other direction. Let's say it's 60 pips. So 60 pips is going to be less. Okay. So so $20 is 0.03. How did I get that number? 30 cents times 60 pips is $18. So it's rough. So it's actually 0.033, but most brokers only go to the second decimal. So that is $18, okay? So if it's 100 pips, it would be 0.0, if it's 100 pips, 100 stop loss, which is a huge stop loss, you would never, that's a poor example because you'd pretty much never use that. But if it was, you would want a 0.02 lot size, because that's 20 cents per pip times 100 pips is $20. Okay, so I hope that clears up how that works. So the formula, you take how much you're willing to risk per trade. For $1,000, 2% is $20. And then you find how many pips it is, and you multiply that by the dollar amount per lot size. Okay, so the lot size is how they work is basically you multiply it by 10, and that gives you how much it is. So 0.01 times that by 10, you get 0.1, that's 10 cents. 0.05 times that by 10, you get 0.5, 50 cents, okay, et cetera, et cetera. So how to stay out of trouble. Don't open too many positions at once. Proper risk management with your percentage, how much you're willing to risk, the dollar amount. You need to trade safely. So that's a huge part of it. Understanding how far away your stop loss is, and a lot of the strategies are based off how far away your stop loss is. So for me, for the scalping I'm doing, my stop loss is 10 pips, and my take profit is 15 pips on just about everything. So what that means is first of all, you want to have a better, your risk to reward ratio should be at least 1 or higher. So that means you don't want to trade a 50 pip stop loss with a 10 pip take profit, because it's not worth it. You're only going to get 10 and you could lose 50. You want to go at least 1 to 1. So 20 pip stop loss, 20 pip take profit is okay. I like to go better. So mine's 1.5 is my ratio typically. So it's either 10 pip stop loss, 15 pip take profit, or 20 pip stop loss, 30 pip take profit. So risk management is a huge part of trading. There's nothing more discouraging than blowing your account and financially just really pounds you and makes you super pessimistic about trading, which most people that tell you that trading is fake or doesn't work have blown their accounts because they weren't using proper risk management. It does work, it can work, you have to do it correctly, which is what my company and products are all about and what I'm trying to share with you guys. So as always, you guys rock. Thanks for watching. Nothing is required of you guys ever. I'm not asking for signups. I'm not asking for this or that. If you want to, go ahead and engage. You guys can like it, share it, like my Facebook page, ForexWithJake. Comment if you want to talk to me. Message me on Facebook, ForexWithJake. I will get back to you as soon as I can. We can talk about trading, my company, baseball, playoff push is coming up. I'm super excited to see what happens. Really holding out for the Brewers and the Phillies. I like to see them make it because I'm a Padres fan and I'm always going for the underdogs. So I'm super excited to see what happens in the baseball season. Back to the actual point of trading. You can talk to me about that as well. So our third edition of the Fun Foreign Fact, I hope you guys are starting to like these because I sure am. So today's Fun Foreign Fact is that Russia has a larger surface area than Pluto, the X planet. So that is pretty crazy to think about. Russia is enormous, Pluto is not. Fun stuff. So have a rad rest of you guys' day. Buy low, sell high, ride the trends, and go with the flow.